that glitters is gold. And boy, does that apply to the eye-watering prices that we're seeing today. The headlines are no longer shocking. Gold prices at record all-time highs, sparking a bit of investor fever. But when we talk about buying gold, what does that actually mean? Is it the necklace that's hanging in the display case of a jewelry store? Is it that heavy gold bar in a safe? Or is it a digital ticker on your phone? This is the Money Talks podcast. I'm Andrea Heng. Welcome to the latest episode. Now, today we are going to peel back the foil on gold ETFs. Joining me today is Xiang, head of ETFs at Lion Global Investors. Hi, Xiang. Welcome to the podcast.
Hey, hi Andrea. Hi everyone.
So, let's clear up some terminology. There's gold jewelry. There's the physical gold bars that we see endless pictures of, or coins. And then there's gold futures, and then there's gold ETFs. So quite a number of ways in which you can invest in gold. But what is the difference when you buy gold in each of these ways?
Yeah, there are actually different forms of ways to access gold in terms of exposure. So for jewelry, it's actually basically a consumer product. So investors actually, when they purchase jewelry, they pay for craftsmanship. They also pay for high bidder spread, and at the same time, purity, sometimes it might not be as high as 99.5% for a lot of different buyers and consumers. So this is one part to take note of. Then for other areas or other kinds of products, for example, like gold futures, they actually have a lot of counterparty risk involved, together with rollover risk. So all these could involve extra cost or extra risk. Then at the same time, for futures, there's also leverage. And the third thing for futures is sometimes there's counterparty risk involved.
Okay.
So these means that, for example, if the issuer of the futures goes, let's say goes bust or something,
Yes.
investors might have risk of losing capital. So so this is one thing to take note in terms of futures. So, and with all these, actually, gold ETFs, they can be more friendly to investors, because for gold ETFs, what they do is they bring gold at an accessible entry point,
Okay.
together with convenience to investors. In fact, there are actually two types of gold ETFs. First type is synthetic gold ETFs. So basically, synthetic gold ETFs are actually backed by gold futures. So they
Okay.
actually use gold derivatives, gold futures, to be able to track gold prices.
Got it.
So with this, the same risk that applied to gold futures might be also applicable to synthetic gold ETFs. And there's also the second type of gold ETFs, that would be physical gold ETFs. And
I
these
see
are
the
the kind.
difference because it's physical, which is the real gold, and then there's synthetic, which is paper. Got it.
So, and the physical gold ETFs, they are basically usually backed by investment grade physical gold bars. So this means that the purity, for example, usually they meet global standards at around 99.5% in terms of fineness. They are vaulted with a professional custodian, and each of these ETF units represents a fractional interest into the underlying physical gold. So with this, there's actually greater backing and also greater assurance.
Okay, something you said earlier that was quite curious to me. You talked about a bid-ask spread. So what is a bid-ask spread, and how is it derived, and how does it affect me as an investor?
Okay, so I think in terms of bid-ask spread, it basically means the difference between the buy price and the sell price at any given point of time.
Okay.
So basically, if the difference is wide, it means actually investors actually lose out, because when you pay, let's say, for a certain buy price, and the sell price, if it's lower, you actually lose out in terms of bid-ask
Right.
spread. So think of it more like a transaction cost
Okay.
involved. So ideally, if the bid-ask spread is lower, it can be more favorable for the investors. And ETFs usually tend to have a much lower bid-ask spread
Okay.
compared to physical gold.
I see. Okay, interesting. I wanted to clear up some misconceptions about gold ETFs that I've been reading about. So one of it is this fear that ETF is just paper gold. And you talked about it earlier, right? The synthetic versus the physical. A paper gold is a digital promise that can vanish anytime, right? So for a standard physical gold ETF, is there actually a specific pile of gold sitting somewhere in a vault with my name on it?
So for gold ETF, physical gold ETFs, they are backed by physical gold, which have to meet global standards.
Okay.
And the global authority setting all these standards, they are the London Bullion Market Association, also known as LBMA. So some of the standards they actually set is the gold bars have to have the refiner name, have the serial number, which are to make it uniquely identifiable. There has to be minimum fineness of 99.5%.
Okay.
So they have to be also of certain size, for example, like 400 ounce, or sometimes within Asia, kilo bar. Sometimes they are also more actively or frequently traded. And all these after procuring the gold bars, when we receive the investor subscriptions, we also have to vault them with a professional custodian. So, and these are usually stored and vaulted in highly secure facilities with actually a lot of different features. For example, there can be cases where if there's a fire, there will be liquid nitrogen
Oh
automatically
wow!
activated
So it's
to
real. Like this is not a movie. This is real. A real vault with real gold in it.
yes.
Okay.
So and usually some of the vaults they are also underground, so to ensure that they are more free from different threats. All these actually make Singapore quite an ideal location to store gold because
Ah,
within Singapore there's rule of law is stable. There's also low risk of natural disasters
that's true.
in Singapore. And the third thing is within Singapore actually there's been no risk of gold confiscation before, which has happened in other countries. And all these are key things to take note when investors invest in a gold ETF. It's important to know where the gold ETF actually vaults their gold, whether they actually fully insure their gold, and also at the same time, what kind of costs they are paying in terms of this gold ETF.
So basically, you are telling me that there are vaults with physical gold in it, but I can only take your word for it. How do we know that the gold is there? I mean, who audits a gold ETF to make sure that the bars aren't just, gold plated or not 99.5%? I mean, who is the one that's verifying that this gold is legit?
So I think in terms of a gold ETF, there are actually different layers of assurance to come in, different parties and stakeholders involved to ensure the purity. So for example, in terms of whether the gold bars exist and all this, the funds auditor, they have to do at least an annual inspection of the gold bars to ensure they are physically present.
Okay.
And also at the same time, for the funds custodian, which is supposed to be the professional party in charge of vaulting the gold. They are also required to do periodic reconciliations and check to ensure that the high value items like gold, they are actually consistently present and also existent within the vaults. And in fact, like for some of you who manage to, if you have managed to have a chance to visit a vault, you will notice that actually a lot of the gold bars, they are kept inside sealed crates that come from the
Oh,
refiners, from the gold
right.
refiners.
So you can't actually see them. They're not on display. They're not
They are
stacked
not
on
on
a shelf
display,
somewhere.
and they come directly from the refiner. So I think if the seal is broken, sometimes it also could mean that the gold bars are like kind of people can already see the gold bar. So
Yeah,
a
they
lot of
can be
times
tampered with,
they
right?
can be tampered with. So because of this, that's why a lot of times gold vaults they actually come in sealed crates from the refiners directly.
I see. This is so eye-opening because I always thought, you watch too many movies when you only think of stacks of gold bars on a shelf sitting in a safe in all those heist movies, right? Clearly is not the case. Okay, so let's go into the nitty-gritty of a physical gold ETF. How does it work? Apart from what you've told us, which is that it's backed by physical gold, sitting in a vault, insured here in Singapore. How does it work?
In terms of how an ETF works, there are actually two different markets for an ETF.
Okay.
The one that is more familiar to normal investors, including myself, is actually the secondary market, where the ETF is actually readily traded on trading hours, for example, like an exchange on SGX. Is where ETFs, where investors actually search the tickers on the broker app. For example, ours is GLS and GLU. You search it and then you click buy sell
Ah,
on
okay.
the app. So that's the common part. There's the other one, the one that is off screen is more institutional investors because they have to usually hit a minimum basket size to be able to create and redeem directly with the participating dealers. So participating dealers, think of them more like institutions that have the ability to create or redeem ETF units in the off the secondary market, in something we call the primary market. So usually there's a minimum size involved. For example, sometimes it can be up to millions. But for ours, we kept it low, probably at around few hundred K USD to be able to ensure better creation and redemption. And all these actually help to boost trading volumes and also liquidity for all the investors.
So the 4,000 ounce, the 400 ounce bar would be in the primary market.
Sometimes for ETF issuers, they can set a high basket size. For ours, in terms of basket size, the value is similar to a kilo bar. So it's at around USD 150K. So we try to keep it low to encourage more activity by institutions to create and redeem ETF units.
Okay.
And all these help to boost the liquidity of the overall ETF ecosystem, and also ensure that investors are also able to readily buy and sell the ETF units which they own.
So in a way, it's making sure that there's enough gold to go
Yes.
around
Yes.
for these traders in the secondary market, right? Okay. And when you say institutional investors, we are talking about banks, governments, etc. Let's go back to the question about, the gold that we see on other robo-advisors versus a physical backed ETF. You were saying that it depends on where they are vaulted, right?
And other than where they are vaulted in terms of vaulting jurisdiction, another thing to note is whether these gold funds, whether they actually fully insure their gold.
I see.
So fully insuring, having the full insurance is actually important to add this extra layer of assurance. And what we do actually for our ETF is we fully insure them against loss, damage, and theft while in custody and transit. So when I talk about in transit, it can be quite vague. So I think I can put it clearer. So for example, once the gold we purchase reaches Changi Airport,
Yep.
and there's this armored vehicle that will transport the gold to our vault in Love Freeport, Singapore. And during this transport timing, this length of transport when this transport is happening, if there's any loss, damage, and theft happening during this transit period, the insurance coverage will cover it.
Oh, okay.
So it's actually important to be able to add this new layer, extra layer of assurance. And a lot of gold funds out there, they actually do not fully insure their gold.
Okay. So I want to paint you a scenario now. And hopefully you have an answer to it. So let's say the world goes into a total meltdown and the internet goes down. We have an outage, days long outage, not like a few hours. I can't exactly trade my gold ETF units to buy roti, right? To buy bread, right? How do you address this doomsday concern? Now, I know this is Singapore and it's rarely you think of it as a possibility, but we must always be prepared, right? So how would you address this scenario?
So I think in terms of this scenario, if there's this doomsday scenario
Yeah.
happening, I mean, we are a little red dot. If this happens in Singapore, everywhere else in the world, probably this will be the similar scenario or also similar occurrence. So, and in this kind of scenario, this is also where having full insurance is important. So let's say there's a doomsday scenario, we have to change vaults and all those. So
correct.
even that if the armored vehicle transports to go to another vault and all these, there's still this insurance coverage. So if let's say this kind of extreme scenario were to happen, having this insurance coverage would be important to also add this final bit of assurance for investors.
Okay, but what would you say then to the investor who still feels, after all these assurances that you've given us today, right? They still feel like perhaps a gold ETF is kind of like it comes with a bit of a disadvantage because you don't see it moving around. Yes, you can assure me that it's insured and vaulted, etc. But I still feel physical gold is, I can see it in doomsday situation. It's still in my hand. It's still in my safe. What would you say to that?
Andrea, if that's the case, maybe the investor should just buy both physical gold and also the gold ETF.
Okay.
I mean, the gold ETF, the benefits is liquid. It can be traded easily on the exchange.
Right.
But the physical gold also, there's some tangibility involved. But do note that if investors were to buy the physical gold, other than queuing and all those, storage, insurance, logistics, and also a lot of different considerations like bid-ask spread also have to come into play. So in terms of getting gold exposure, physical gold ETF, there are a lot of different avenues out there to go and build this kind of exposure. And what we are also advocating, also sharing, is that having gold within the portfolio is actually an important allocation. to be able to add more diversification benefits. So I think it doesn't mean it has to be 100% or 50%. It's just having a small allocation would be important to help realize more diversification benefits. When I talk about diversification benefit, means on the portfolio level, reduce the overall volatility or the ups and downs in terms of the price swings, but at the same time helping achieve higher returns at such a lower volatility.
Okay. That's a good idea actually, to combine and have a hybrid portfolio, gold portfolio, if you can afford it, of course. Okay, so for someone looking at the Singapore Exchange SGX right now, they might see gold ETFs traded in US dollar and Sing dollar. What are the considerations for deciding which currency to buy it in?
Okay, I think in terms of the currencies to buy it, first depends on whether the investors holds more US dollar, also holds more Sing dollar. If you're an investor like me, you hold a lot more Sing dollar, probably it could be easier and more accessible to buy the Sing dollar ticker. And also the Sing dollar ticker we have, like all SGX listed ETFs, as long as it's Sing dollar ticker, they are usually eligible for SRS subscriptions.
Oh,
So this one thing to take note, the Sing dollar ticker actually can accept SRS subscriptions. Then for the USD ticker, if you happen to have USD sitting somewhere,
Yeah.
after, for example, you sell your US listed instruments and all those, you can consider using it to invest or also access the USD ticker. But most investors, we think, especially if they are Singapore based, they usually assess the Sing dollar ticker. But for institutional investors, usually they hold more US dollar.
Okay.
And because of this, sometimes they prefer buying the USD ticker.
Okay, interesting. Okay, so before I release you from the hot seat, just one more question here. If a listener is sitting somewhere listening to this and thinking, okay, I have some savings, I'm worried about inflation, and I want to get into gold. So, how can they get started investing in gold ETFs today? You talked a little bit about the brokerage, the fees, and all that kind of stuff. So, how do I go about making this move?
Okay, in terms of first few steps to take, first is to try to understand the product structure
Okay.
of the specific gold ETF. So see whether it's synthetic, meaning whether it uses gold futures or other derivatives, or whether it's physically backed.
Okay.
Physically backed gold ETFs usually have slightly higher management fees because there's actually more cost involved.
Of course.
Because they have to think of storage, of vaulting,
It's
of
not
insurance.
literally not the paper gold, it's actual gold that you have to pay for and manpower and all that kind of stuff, right?
And usually physical gold ETF, because they are buying the real physical thing, the risk can be usually they are a bit lower. And the second thing also is to take note on setting up the brokerage account. I think to buy something, if you want it to be in your CDP account, so remember to set up the SGX CDP account.
Yep.
For the brokerage app you're using, do some research to see whether in terms of the brokerage commissions, what they are charging for buy and charging for sell. Because some actually charge low for buy, but actually charge higher for sell.
Right.
So I think these are the smaller things
okay.
in terms of smaller details
Yes.
to take note. And also another thing to take note is about the when physical gold ETFs, they talk about them being backed by gold. Check the vaulting jurisdiction where the gold is vaulted. Singapore so far has been an ideal location to be able to vault gold, and also at the same time for whether they are the ETF fully insures the gold against different risk kind of events. So all these can be important whenever, let's say, if Doomsday scenario has happened. So I think having full insurance against all these kind of risk events can actually be important to be able to add this final few bits of assurance to your ETF units and also to your gold back holdings.
Yeah. This has been a really insightful conversation. I'm so glad that we had this because it's quite a new concept that we're exploring. And it makes me want to go find out more. Thank you so much for putting the pedal to this precious metal, Xiang. You've been really helpful.
Thank you. Thank you, Andrea. Thank you, everyone.
And thank you to the Money Talks community for tuning in. Now I want to leave you with a question. Are you a physical gold person who likes the weight of a coin or a bar? in your hand, like what Xiang did in a vault, or would you invest in a gold ETF? I want to know what you think, because I think it's increasingly challenging to go buy physical gold. People are a bit scared of the prices. Maybe a gold ETF is that more accessible, palatable way of investing in gold, especially since it's backed by physical gold. So I want to know from you. Let me know, okay? You can leave a comment wherever you're listening to us from, or you can also write in to us directly at cnapodcasts@mediacorp.com.sg. This has been a Money Talks podcast. I'm Andrea Heng, signing off.